Now welcome to a groundbreaking section of Amassing Investment, where we redefine the approach to technical analysis for Apple stock. If you've ever been intrigued by the stock market, you're likely familiar with the term technical analysis. Traditionally associated with charts and indicators like moving averages or Bollinger Bands, conventional technical analysis has been a staple for traders seeking to navigate price action. However, it's important to note that despite its popularity, traditional technical analysis offers limited reliability, contributing to why many retail investors face significant losses. Here, we transcend traditional methods with our probability-based technical analysis. This innovative approach integrates statistical methods with classical technical analysis to calculate the likelihood of future price movements. By embracing the complexity of market unpredictability, we leverage historical data and market trends to forecast with greater accuracy. The common tools used in probability-based technical analysis is the Monte Carlo simulation and the Gaussian distribution, using which traders can calculate the probability of different price movements and use this information to make more informed trading decisions. But don't worry, we will not leave you with these mind-boggling approaches. Rather, what we have done, we have oversimplified the above approaches in this page so that you can use it more efficiently. Let's begin exploring Apple stock's technical analysis page. It features three sections: technical analysis historical, technical analysis implied, and historical versus implied. Starting with the first one, begin by selecting the amount of historical data to base your future predictions on, then choose the forecast period and your start date. This generates a forecasted chart and table. The table features predicted high and low prices, with a probability row in the middle indicating the likelihood of these outcomes. For instance, a 65% probability, or first standard deviation, suggests a 65% chance that prices will stay between a 24% increase to 228 and a 13% decrease to 158 over the next 180 days. Conversely, there's a 35% chance prices will exceed these bounds. This data is visually represented in the chart, showing intervals of 10% probability, where the extremes mark 90% and 10% probability price targets respectively. This probabilistic approach offers a nuanced understanding of market dynamics. Moving to the technical analysis implied section, we shift from historical patterns to forecasting based on options implied volatility. Here we only focus on the first standard deviation, or a 65% probability. For instance, with a 120-day forecast, there's a 65% chance the stock price will range between 221 and 163, making it simple to understand. Lastly, the historical versus implied section amalgamates the insights from both historical and implied analyses into a single, comprehensive view. This fusion allows for a more informed comparison and realistic projection of future price movements. As we navigate through these predictive landscapes, it's crucial to remember that these projections are based on historical data and are not guarantees of future performance. They do not constitute investment advice but rather serve as tools for informed decision-making. Always consider the fundamental valuation of Apple alongside these technical analyses to ensure a balanced investment strategy.